Good morning, Colorado. Today is Thursday, the 18th of August, and I'm Randy Flood, the only certified mortgage coach in the state of Colorado. A lot of things were happening today. In the rates go up category, the consumer price index was up a little bit. It was 0.05%. That's what they expected. And when you exclude the food and energy, it was really down to where they expected. Not a whole lot to say about the leading indicators. Very few people really watch it. Now, where it really gets exciting is where the rates go down. Europe again, a lot of problems, and I'll talk about that in a few minutes. I'll talk about it right now. One is Japan's economy is slowing. The retail sales in the UK have significantly dropped. France and Germany, the two strongest economies, powers met yesterday, and basically, they don't want to bail out the rest of Europe because they're not in the greatest shape either. Now, jobless claims, unemployment is back over 400,000. It increased by 9,000. Another 7,000 on continued claims. The core CPI is what I was mentioning here. When you exclude the food and energy, which is very volatile, came in just fine. Existing home sales, however, are at all-time lows. They expected it to be, it was actually down 3.5%. Now, the Philly Fed, a lot of people don't realize what this is, but the Federal Reserve Bank in Philly, or Philadelphia, they take a survey, and they take a look and see what the businesses are expecting. And, this way they can anticipate what businesses are going to do, and it's in reference to growth. They were expecting 4%. It was a minus 30%. So it really tanked, and that's a reason, that the Dow Jones actually lost a lot. Here's what the market is doing right now, and as you can see, this morning it was actually up a lot higher. It's dropped down a little bit, but we're well above the 10-day moving average, which is good. We're just right above a trend line. So I think when we come back down, and eventually we will come back down and have a correction, but when we do, when we break this point about right here, it's going to have a significant drop. But all that is very healthy because we can't just continue to have the bond rally keep on going indefinitely. From time to time, I like to also show what the lenders are actually doing, and as you can see here, over 70 of the lenders have increased their pricing to almost 0.3 basis points, which is good for interest rate. That means you're going to get a better deal on your interest rate. This is what some of the other services are recommending. Rate alert, once again, if you're closing within 7 days, lock. Other than that, just go on float. But once again, the lenders are really defensive because of all the volatility. And the daily rate watch or rate lock advisory, if you have a deal that's closing within 20 days, they're recommending that you lock. Then thereafter, go on and float. And I'm still very bullish on low interest rate. I think we're going to continue to see that because once again, the economy is not improving. We don't have the manufacturing picking up. We don't have jobs being created. The housing market is very, very weak. And we can't have a recovery with all that. So once again, I see interest rates being very low and even possibly even lower than what they are now. So in summary, the Dow was down 3%, this morning based on all these news. The financials like Bank of America, they were getting clobbered. The 10-year bond was at all-time lows, and I think it's actually going to get lower as we go, which means, once again, better interest rates. The CPI was so-so. Jobless claims, as I mentioned, was up over 400,000, or was above 400,000 again. Japan, their economy is slowing. UK retail sales, their economy is on life support too. And it's all about the global concerns and everything that's happened in Europe, Asia, China. It affects us, and of course we affect the rest of the world too. And as you already know, our economy is not doing well. The thought of the day: now's the time to fix the next 10 years. And this is by Jim Rohn. And he wasn't necessarily referring to the economy, but I think it's very true. We need to take a look at creating jobs. We need to go on and take a look at reducing the deficit. There's a lot of things we can do. But in our personal lives, there's a lot of times or a lot of things that we can do also. And I recommend that you take a look and see what you can do differently to make the next 10 years better. And once again, I hope you enjoyed today's update. If you have any questions about your mortgages or needing to buy a home and get pre-qualified, go and give me a call. I'm here to help you. And as always, wanting only the best for you.